Hello and good morning, folks. Welcome back to Almus Market Mornings, your daily dose of global financial updates with me, Shikhar Garg. I'm back with the morning podcast just as FOMC is back with another round of rate hikes. And the question is the quantum of these rate hikes. Now, most market participants has discounted a 75 basis hike, but a surprise would definitely put the markets in a reactive mode. So oil was also seen up again while the USD stayed steady. So Pankaj, what's your take on the expectations out of FOMC and what should the markets be doing after the FOMC?
Uh, Good morning, everyone. Thanks, Shikhar. So my brain or my mind wonders whether tonight is a night where Fed will take a major call, whether they will go with an inflation narrative or they will change into a growth narrative. Now, what they will be dealing in futures FOMC meeting, that will become very, very critical by today's narrative. One set of a section of sectors, or one set of a market segment believe that US might reach or indicate that what is their terminal rate, or maybe the today's kind of a rate hike will indicate that are we already reaching a rate hike cycle peak, or we will be looking at a inflation narrative which says that even rates prices start correcting, whether the inflation would be dipping below 6%, and whether the Fed will start cutting rates. So the night basically, or the today's communication will indicate where the FOMC headed. I believe. Okay, the another set is whether as of now they are on a preset of increasing interest rates, whether they indicate the future data dependency will be more for dealing with the rates or hiking the rates. Whether Fed will take a U-turn today saying the rates have peaked and we will cut the rates. My sense is US will keep increasing rates, maybe to the tune of a 275 to 3% minimum before taking a call that they have reached the peak. That's the sense, or they might around those levels indicate that we will be becoming a more data dependent. So end of the day today, we will be having a rate range of a 2/4 to 2.5, a 75 basis rate hike, and maybe another 50 in September. And September they might be putting up, saying that now we will turn to a data dependency. We are not on a pre-course to fight inflation. Yesterday, IMF has released a growth outlook for world and for India. Almost every country, they have downgraded the growth. They have actually downgraded a growth of a 0.4% for global growth from 3.6 to 3.2. And the revision had happened only in the 2 months. April, they indicated 3.6. Now they're indicating 3.2. The most growth forecast cut have come in US, and Euro also has been rate cut. Growth forecast has been cut in Eurozone also by 0.2%. In India, they have cut down the growth forecast by a very long, I would say very high quantum, 0.8%, from 8.2% to 7.4%, and citing the unfavorable external conditions and rapid policy tightening. So this will not go well with the equity investors. They were already thinking the India is a growth story, and it will keep posting the higher growth, and that will be taken as a negative. The another factor, there was a rumors that US will increase the oil supplies from their SPR. There's expectation that another 20 million of barrels would be released. I think somebody has already negated from a White House. Then there won't be further delivery of or further supply from a SPR. So Brent crude oil looks like between a 98 to 105 area for some time. Dollar again regained its upward momentum yesterday. US dollar index crossed 107, and the primarily they have gained against our dollar index has gained against the euro. On a further European Union problems and the energy challenges, European Union members country reached that they will reduce the supply. They will basically they will look for a reduced supply from Russia, and there will be emergency gas cut this winter. And they have said that they will cut gas use by 15% from August onwards, and all that will impact their growth. Now, coming to the European rate hike cycle, where the US rate hike cycle is clearly indicating that whether we will be having a 75 basis hike today. The the Euro curve start actually pricing the 50 basis rate hike in September and 25 basis rate hike in October and December, and they will be peaking the rates around 1.10 to 1.15. So broadly, it looks like all central banks, the major central banks rate hike cycle would be complete by September or December, or not by September, but by December. And from there on, market will start pricing the rate cuts. Coming to India, USD INR is likely to trade between 79.70 to 79.95 today. Today is a futures expiry. We have got a OI interest of a 3 billion, 3.2 billion, which is actually a lower number than the on NSE, which is actually a lower than the previous cycle OI, which was around $5 billion. And last time, on last expiry, we had seen a major move of 60-70 paisa on expiry day. That should not be the case today. That's all from me. Thank you.
Okay, that was wonderful, Pankaj. And I'd like to highlight this one bit wherein he mentioned about narrative. Now, folks, narrative is what generally moves the market, though we may talk about valuations or any other mathematical or financial jargon, but it's the narratives from the market and the market participants which sets the tone for all these rest of the parameters. So let's see what's going to be the narrative from FOMC on the rate hike cycles, while it is expected that these rate hike cycles should end around the quarter of September and December. Now, another thing that we've mentioned is the slashing of GDP expectations by the IMF. While India was seen to be slashed by 0.8%, quite significant as compared to the global projections of 0.4%. Though the demographics is good, the India growth story is in question by a lot of people. Let's see how things go about. We'll come up with another round of updates tomorrow. Thank you for listening.